Hello, good morning. It's Thursday the 26th. I'm FX Blue and this is the market brief. So we had Sue Gray's report out yesterday. I've not read it, I had better things to do with my day, but I'm guessing it must be a little bit ambiguous, given that Boris claims it vindicates him and confirms he did not lie to Parliament, while Keir Starmer thinks he's bang to rights and Johnson should resign. Politicians, eh? Boris does look likely to survive this. And he also does look likely to sign off on plans to support the low-income families struggling with the cost of living crisis. Classic action. Distract with more cash and sweep Partygate under the rug. You know the rug. The nice expensive rug bought as part of that questionably funded flat refit when Boris moved into number 10. Politicians, eh? But away from all those dirty tricks, the economic growth is slowly grinding to a halt in the UK and fears of stagflation are growing. Stagflation is where stagnant or negative growth is coupled with inflation, and it's a bit of a tricky one to unpick. PMI services growth dropped like a stone, while inflation is still rocking a pretty casual 9%, so it certainly looks like a very real risk. This is a big concern for the Bank of England. Hugh Pill was on yesterday. He's the Bank of England chief economist, and he spoke of the need for rate hikes to continue despite the fear and the risk that they could lead the country into recession. This helped clarify some of the doubt over the MPC's plans, as questions were being asked over whether we would see a pause in the rate hike action to re-stimulate UK growth. In the market, sterling rose a little yesterday. We touched 125.90 against the dollar and about 117.80 against the euro. Over in the US, the Fed minutes were released yesterday. This helped underline the Fed's recent hawkish approach, but it didn't really clarify whether we would see one or two more 50 basis point rate hikes in the near term. Some believe that moderating the pace of inflationary growth may allow the Fed to temper the rate hikes, and this would certainly appease those fears that aggressive rate action could tip the US economy into recession. The minutes reaffirmed the belief that tightening policy now will allow the Fed to review again in autumn when any slowdown should be at its peak. So maybe they'll crack on with further 50 basis point rate hikes in the short term. We'll see. We had durable goods orders out yesterday as well. That covers big ticket items like ships and aeroplanes, and it's a great leading indicator for the medium term economic performance. Unfortunately, this dropped to 0.3% in April, down from 1.2%, and refueled fears of a recession in 2023. The market focuses on the short term though, and the dollar index actually gained yesterday. It bounced off support at 101.70 and closed over 102. Euro dollars managed to hold on to most of the recent gains. That opens this morning at about 106.75. So that's it from me. Have a great day and join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.